it is a pleasure to welcome you into the Alliance, but also into this conversation today. And I know there's a lot of people with a lot of questions, so we are going to record today's session as well, so that those who couldn't make the time, because it's always hard to find a time for everybody, they can at least listen into our conversation afterwards. So I want to hand the floor to you. Maybe you can just very quickly start us off with just the background. When did FITSPA form? Why did it form? What was the drive? And what did that initial sort of first period look like for you?
Yeah, I'm really, really excited to be here, and thank you for having me. It's very unfortunate that we finally connected. When we had our first conversation, our visions aligned. It was really very inspiring to know that there's someone out there that shares the same vision and goals for associations and passion. Because yes, you can share the vision, but the passion. So it's really nice to meet you, Sarah. And hopefully we can do more together now that we are part of the associations. I am really excited about what building fintech associations across Africa and the globe. But above all is sharing the FITSPA story, because I believe we've gone a long way and we've been able to refine and rebuild what we thought is supposed to support the community. Currently, we are 7 years old. And really,
that's quite old in association years, actually. That's quite an old one.
When we made 5 years, it was really for me, because I've been in the fintech, in the startup world, and I knew that startups don't exist after 5 years. So I was really excited when FITSPA made 5 years, because I knew what this meant, that we are in for the long run. Yeah. So the association started as it was a group of I'll just take you briefly through how the association started. It was a couple of fintech service providers that thought needed a unified voice because as one fintech, you're so small, but as with a group of people, you're bigger. So they needed a unified voice to handle any challenges. One, speak to the regulators, engage any unfair competition in the market. So 7 members came together to really see, how do we build a union, and how do we find, okay, there's fintech in Uganda, but where are they? Who can find them? Who knows how many we are? So the 7 members came together, and with the support, they went to FSD to help them convene the meeting, because FSDU previously was working with a couple of fintechs before. So FSDU helped them convene the meeting and get them structured. And then the association started. So FSDU helped them in the structuring the association, convening the first meetings for the associations to take off. So it was really the 7 members, they became the governing bodies of the association for the first year. Actually, they did 2 terms for the first 2 terms, just to let the association grow and transition. And they were not just the founding members, especially the board wasn't just the founding members. They actually invested in the association financially. They invested their time, their sweat capital. They provided the vision and the guidance of the association. Yes. So after the 7 years, the first 3 years of the association focused on building structure, building a community, engaging stakeholders, and then creating value proposition for its members. So they're able to pay membership. Without the value proposition, it wasn't easy to collect membership from the members. So we spent the first 3 years looking for that value, building that value, and kept on refining it with the members, because you also can't build value without the community. So you needed the community to ask them, what do you need? What do you want to see? How can we build you? And then we create the value for them. Yes.
And I think, so many associated others. I know others, and we've done more of these series. You know, and if I think about FinTech Association for Consumer Empowerment, FACE in India, they formed in a similar way. You know, a group of founders who were frustrated by some of the challenges of running digital credit fintechs in India, got together, got a board going, and invested time, sweat, and also from their own pockets to start. So, you know, that is clearly a way that other fintech associations, you know, do start. But what I really am interested in unpicking with you a little bit more is 3 years. So, you know, we've just hit our 3-year anniversary in the Alliance of Digital Finance and FinTech Association. So we're excited. 3 years is a good milestone. But yet it has taken us that long to be invited to conversations at the table. And now the invites come in thick and fast. I have to turn them down because we can't respond to them all. But a lot of these associations that we've got on the call with us today are maybe in like 6 months or a year one. How do you keep the motivation going for those first 3 years? Because it's really difficult. It's a lot of trial and error and starting things that don't necessarily pay off. How do you keep that motivation and commitment going? And you know, what do you do to try and identify the best routes to go down? Because there are often multiple ones to go down, right?
One of the things that I thought about the first thing is for every, previously before joining the association was, I was working for a company that had, that was one of those 7 fintechs. And I knew we had started a couple of other fintechs before that had, not fintechs, but associations that had failed before. And one of the reasons that really drove me to just like any other business, you must have a vision bearer. There has to be someone that spends sleepless nights thinking about the growth of the business. There has to be someone that invests their time and capital into that. There has to be someone that wakes up every day thinking about that association. It is not a side business, because most associations I've seen in the 34 countries that I've supported it is a side gig of someone who is a vision bearer. But someone has to make it their main gig, their main business, and their main to grow it. It's not a part-time job. It's a full-time job. And also, even when you're having those conversations, it's like a sales job. You become a salesperson. And in sales, you provide, if you're selling a pen, you must be able to demonstrate what is the value of that pen to the person going to use it. How is it different from the existing pens in the market? So that is the value. When you go to, so when we started going, even to the members that I was pitching to, is you have to show them how different is this association going to be from the ones that have failed? How is it going to be from the ones that exist and are not working? Because they ask you all those questions. When you go to the regulators, what is the value for this association for the regulators? Any stakeholders, even when you go to the universities, you must be able to give a value proposition for everybody that you're meeting, for all the stakeholders you're engaging. And for us, it was move. What value are we bringing to the community, to each member, to the regulators, and to the various stakeholders? Yes. So the why has to be really clear. Why are you starting an association? And who is your community? I think many of the members, many of the associations I've dealt with fail to define the why at the very beginning. What do you want to, what gap are you filling in? What problem are you solving? And who is your community? Who is your member? Define your member. And once you're able to define that, then it's easy for you to even attract other stakeholders.
I was smiling a little bit because we've got a couple of the associations on the call with us who are going through our accelerator program at the moment. And that was actually a big purpose of module 1 of the accelerator program. What is your vision and mission? What is your purpose? What problem are you solving? What gap are you filling in the market? And module 2 is membership. Who are your members and your stakeholders, and what value are you giving to them? So, I mean, it's great to see, you know, even though you've never seen that program.
Oh, I've never seen the program, never been in the program, and I would love to get into the program as maybe just, yeah, and I would like to recommend the program for other industry associations that are struggling, yes.
You know, and so we're always looking for mentors in that program, Zaina. So maybe we can add you also to the list of, you know, as being a mentor for those who are going through that program.
I'm happy to support any industry association that needs my help.
Excellent. We're delighted. I think we're both very much aligned on, you know, the need really for a why and a clear vision. You cannot pitch for funding. You cannot ask people to pay for anything. You cannot really even, you know, be an association without having, you know, that
a community. Because you can't build, one of the things I keep saying is, some of you, I see many associations start with building governance. Who are you building it for? Even structure without the community, because the community needs to be able to define its own structure. It needs to be able to define its governance. It needs to be able to choose its leaders. So, and we keep depending, does the structure and the governance come first or the community? And for me, with my experience and the learnings I've seen is, I think the community should come first. Mm-hmm. Then the community defines the structure and its governed and how they want to be governed.
Yeah, I agree. You know, we've ordered our set, you know, very much that number one is why and purpose, number two is membership, and then the third module is governance. You know, and even, you know, we sort of, with conversations that we have are very much around, you know, things like board charters, what are the board roles and responsibility, what kind of experience and skills do you want there? But again, you know, that is something that you need to be aware of, that is how you run. And then of course following that immediately comes things, and we're gonna get into this as well, around opportunity, you know, sort of what are the activities that you're going to deliver, what is the revenue income source. You know, often we jump to things like revenue, or we think about who's going to be on the board without thinking about actually why you exist in the first place.
And who are you serving? Yeah. I always tell some of the communities that associations, as a leader of an association, it's like a Rotary Club. You have a service to the people that you're convening. So if you go ahead and build a governance structure and select your own leaders without consulting, then the buy-in is going to be less, and you're going to meet many bottlenecks with that.
Yeah.
Yeah.
So, you know, obviously to get off the ground, you needed like an interim board, an interim committee, which clearly, yes, you know, you had those 7 members who formed. We had a conversation about board last week, and everyone was asking me, what do FITSPA do? What do FITSPA? So maybe you can sort of talk us through, how did you transition to those initial 7 members who provided that kind of financial and strategic direction for the organization to where you are now? What does your board look like now?
So from the, maybe I don't know, maybe to the listeners, I just want to tell you what FITSPA is and what we are doing currently. Sure. And then I'll take you through. I didn't get a chance to introduce FITSPA and what we're doing right now.
We jumped straight into the conversation.
Yes. So FITSPA is a member-based association, fintech association with 212 members. And the members serve the various sectors of the industry: agri-tech, insurtech, blockchain, payments, payment service providers, health service providers, everyone that's advancing, that's using technology to advance the existing sectors. And we currently work with 7 regulators that regulate the different sectors of the industry. And really our goal at the association is, we work under 5 pillars right now. One is building a community that we've just been discussing, a community of the members themselves, the 212 members, a community that has the regulators. In that community, we also have investors. Please.
Sorry, we had someone not on mute. They're on mute now.
Okay. Regulators, the community that has stakeholders, the various stakeholders that you need for the community to grow. You have, in that community, you have investors, because you know that investors are going to attract members to come to the group. So you have to find out, what do the members need? So within what the members need, then you build a community that surrounds what the members need. Members needed regulation, members needed bank partners, members needed telecom partners, members needed investors, members needed other key stakeholders. So we brought them together into the community. So while we have 212 members, our community has 480 people. And those members are recruited because we have 10 banks in our community, and we have 3 telecoms in our community. And then and those are members. The banks are members of the association, and the telecoms are members of the association. So that is about the community. Then we innovate. We encourage our members to innovate solutions that scale beyond Uganda and Kampala. And really the main is to promote financial inclusion. The third one is we lobby and advocate for them for better policies and regulations within the ecosystem. So with this, we've been trying to build a safe and regulated ecosystem in Uganda, and we've advocated for regulations. We handhold our members. We've had shifting mindsets, because fintechs previously in Uganda was not regulated. And now that it's getting regulated, so we need to engage our members, encourage them, support them through this whole process. The other one is opportunities. We create business and investment opportunities for our members. For business opportunities, we're partnering with various stakeholders within the industry, industry associations that have, say, AMFIL, Association of Microfinance, that supports our members, who are doing circles and lending and savings groups. We're working with the insurance regulator, the Uganda Insurance Association, that supports insurtechs. So we are trying to build relationships and collab with other industry associations to get opportunities for our members, and also go out there to the different stakeholders and look for those opportunities. For funding investment, we have a member funding deal book. So this is the second cohort. We had cohort 1 and cohort 2 that we share with the investors. And then we're also building a FITSPA fintech fund, a fund for our members looking for debt. So that is our newest baby, building the fund. That really, because we understand our members and they're looking for a fund that understands how they work. Because the banks think, oh, the business is high risk. So we are trying to build a fund that supports the high risk, the high end risk, yes, for our members. I think the last one is gender. 2 years ago, we went into gender, empowering the woman, because when we did a study, the state of the fintech ecosystem study. And we found out, in that study, we found there was a gap. Only 2% were of that time we had 100 members, but actually 1% were founders and CEOs of the fintech women. But the same research says 60% of the workforce of the fintechs are women. So we went ahead to find out where are they stuck at. And once we found out so we started women empowerment just to see how we can get them to the top. And also we can get them to innovate solutions, to become fintech owners. So that is what we are doing. So our community of women is now 500. We are 500 women. And in that community, we are trying to empower them. We have mentors and coaches that are coaching them. We're also trying now to start a savings group for the women to empower them financially in the same group. But also in the group, we share opportunities for women and also encourage each other in the group and really celebrate each other's achievements in that group. For the youth, we noticed that in Uganda, like one developer works for about 3 fintech companies. So we knew that if we don't start bringing talent into the ecosystem, then there's going to be a gap in the years to come of developers and of skills. And also we noticed that the opportunities that are coming out right now require a different skill set, which wasn't there before. So that is when we thought about how do we build the FITSPA youth to just come into the market and just support the workforce, our community. So I think that is how we work. We work with our members through various events. One is we have one-on-ones with our members. We have member surveys. That's how we get to know what the members need and what the members want. We have FinTalks that talk about regulation. We have sector forums that are specific to a specific sector, say agri-tech, agriculture, health, insurance. So we focus on that. And then we have one-on-one visits where we go and visit our members, just engage them. We have social Fridays where the members can host other members. And of course, we have the annual FinTech conference that brings everyone together and summarizes what we've been doing the whole year. And being an association, we also have the AGM in December where we get to meet our members, report on what we've done, share our financials with the members, share strategy, share what we've done with the strategy that they gave us, because really the strategy that we're working with is what has been given to us by the members. And then share what we've done, what we're doing with it, and also ask for what changes that they need and where they want us to focus going forward. Anything else that have I left out anything? Yes, our governance. Right now we have the board. We have had transition of the board thrice actually. Members change from the interim board. We had an interim board that stayed on for 2 years because sometimes it's not good to change leadership when the association is still forming and getting things right. So, and it's also, it comes at a cost. Changing leadership also comes at a cost for an association. So sometimes you don't even have the funding to make the changes. So they did 2 years, they served 2 years. After the 2 years, we had a new board going on, but you see, our members are chosen. You must be a member of the community, and the board is chosen by the members. Yes. We also have, so what we've done with the community, we've built subgroups. So we have a subgroup for digital lenders. We have a subgroup for payment service providers. We have a subgroup for insurtechs, a subgroup for circles. So we have different subgroups. So where we meet them at their point of need. So it's not a general community, but we also have specialized groups where we support the communities.
So there's a huge amount of work that you're doing. A lot of really interesting. When I think about if I had a magic wand and could fund all the associations to do the kind of work that I think is needed, right? So much of that you are doing already, like that, you know, that just that a basic, just networking, you know, those social Fridays and, you know, some of the members meetings is a basic step, but then going on to things like your conferences, you know, getting to know your members, having those working group discussions, whether, you know, the sector and the subgroups that you've got trying to move conversation forward, the regulatory advocacy, clearly the knowledge that you have from what is going on in your industry, who your members are, what fintechs exist, you know, what technology is being used in Uganda. There's so much there that you're doing, and very much you've built your community, but also your activities around your community's needs. So I can clearly, you know, see that there's a lot happening, and that leads me to 2 questions in particular, which I'm sure you know what they're going to be. One being, how do you fund all of this, right? So, yeah, and also then the other one being, how big is the team that work there, and how do you kind of execute on all of this, because that's a lot.
And that's it, because one of the, and it's a fair question, but it's not about, it's how do your team members, it's not about the work, it's about the vision for the team. What drives the team to come and work for FITSPA is that vision. It's more of, we are a team of 5 members, only 5, but only we have
sounds like
only 5
by all the
only
work
5. Everything is done by a team of 5.
That's phenomenal.
A team of 5, but a team of 5 that understands the vision of FITSPA, that came on board because they believe in what FITSPA is doing, and they wanted to contribute to where FITSPA is right now. So everybody on the team really is into the theme and the vision. But above all, we also have, we report to the board. So the board gives us strategic direction that we use to work, but also driven by our members. Most of our members support us in everything that we do. We are purely funded. We are funded by, our business model is purely membership fees, And then we also have activities, but really membership fees. We have 98% paying membership. From the 212, we have 98%. But in different categories, we have platinum, silver, gold, and bronze. And we also have the annual event that really brings in income to support the association. After 3 years, we also received a grant, but a grant to support our activity, the member activities from the Bill and Melinda Gates Foundation. But that was 4 years, after 4 years. But they only support activities. The grant supports activities, specific activities, say women empowerment, member registry handholding. The grant also supports ecosystem building and research.
Yeah.
So everything else is supported by the members and the communities that we work with. Yeah.
98% of your members paying fees is a good indication of the value that they receive from FITSPA.
One of the things I think I left out was I didn't mention, when we have a form where members sign what are the expectations coming to FITSPA. So members tell us, and now we started having meetings before you join FITSPA, just to tell us your expectations and what you want. Most of it is to join the community, actually. Are interested in joining the community, and they tell us the value that they need from FITSPA. So we're able to answer that value on an individual case-by-case basis. And in our packages for membership, we've outlined what we do for each member and for each package when they come to FITSPA. Some of them just come for market exposure. They're a global company and they're coming into Uganda and they want to be exposed to the market. Others want to be connected to regulators. Others want to be part of the community, the networking sessions. Others come in for speaking opportunities, imagine, and they're willing to pay membership fees for that. So it's different. Others come in to meet investors. Mm-hmm. Others are coming in to join the member deal book. So different reasons. People have different reasons for joining FITSPA and for paying the amount of money. So some of these activities are also tagged to how much you're paying. Yes. Yes.
So you can only do certain things depending on the type of membership you've chosen.
Exactly. So for example, if you're a bronze member, you can't host members.
Right.
Because it doesn't, yes, you can't host members. If you're a bronze member, you can't launch with FITSPA. So there's so many, there are limitations that we can do for you. Mm-hmm. But also there are activities that we do that they're for everyone, like regulatory and holding, policy reviews, because we believe they're for everyone. Connections and networking are for everyone, yes.
And that's
industry research and reviews, yes.
Some will be able to afford more than others because of where they are in their own journey, potentially as well.
Exactly.
So it's important that your membership can be inclusive of everybody, no matter where
everybody else. Yes, everybody else, no matter where they are. So that's why we have the bronze, gold, and silver. So you determine on where you are and how you want us to support you.
But there's also a reality of membership-based organizations that
that we need to survive.
Yeah.
But it's and I think most of the associations fail is because they don't look at it as a business. They don't discuss money from the beginning, and even if you must be able to have the money conversations with your partners, with your members, and with your stakeholders. Because otherwise you can't survive.
And I think that's the really interesting thing. The reason why I was so keen on creating the accelerator program and also keeping it very light was many of the people who are sort of founding associations know how to run a business because they're running a fintech, right? They've gone through so much of that, but actually it's just, you've kind of almost got to slightly recontextualize the knowledge into running a member organization because it is different. Your consumers are members now, and they expect a value which will be different from perhaps a consumer. But the same principles of running a business do also apply to running a member association.
Member association, but one of the things also, not every can run an association because associations are relational.
Yeah.
You must be able to relate with the small, the big, the large, the regulator, the everybody. So if someone is, oh, I need to start an association because I want this, I want to, but if you're not relational, if you can't have conversations from everybody, all the stakeholders, then it's so hard. It becomes so hard for you. Yes. Yeah.
It is, isn't
And
it?
also it's depending, like I said, you have to always go back to the why. You find from my experience with the 34 associations, most of them are power driven, and ownership is someone owns, an individual owns it. An individual wants the power. An individual wants to be the source of everything of the association and forgets the community. So all those dynamics really impact the growth of an association. Because, and I keep, one of the things I keep telling associations is, where are your members? For every opportunity I see, it's you. When does your member get to shine? When does your member, every opportunity, you take it as a leader of the association. When does your member get to have some of those opportunities? So most of them have created parallel organizations that take up the opportunities, and they never go to the members. And that is where associations are failing, is because people are creating them for the wrong reasons and for selfish reasons. Members don't get anything, yet you expect them to pay you a membership fee.
Yeah.
Yes.
That's phenomenal. You know, I have on my little board that sits beside me, you know, some of my ruminations and thinking and reflections as I go through this journey. And the two things that, you know, that I think kill associations are ego and no value and purpose. You know, I think unfortunately there are too many set up with no clear purpose and by one or two individuals that are doing it not necessarily for the good of the industry, but for either their own careers or their own fintech that they own, which I think is a danger area. And, you know, and I think it's worth thinking, you know, I want to ask you a question about this because, you know, 7 members set up FITSPA, okay, in the first place. And that is how many associations form. I know we've got the team in Madagascar with us today. And I know from our meeting last week, that's how they formed as well. It's often fintech owners, founders, leaders who form these things. How do you make sure, you know, what practical steps, you know, 1 or 2 steps can you advise those who are forming that they can take in order to make sure that those 7, you know, or 5 or however many people started at the beginning don't then dominate, right, and not take the association best forward for the entire ecosystem? How do you get around that? Because that's how, realistically, that's how associations first form, as a handful of people who are often friends as well. Let's face it. So we've got a dynamic of friendship and ownership of businesses, but yet needing to be more independent, holistic in its approach. How do you go from one to the other?
What I've seen is the structure of the organ from day one. How is your association registered as? Is it, who are the directors? Is it, for example, FITSPA is registered as an association limited by guarantee. So even with the founders, they don't own the association. So there is no ownership. No one owns. It's not attached to one name of an individual. You're just you're the face at that point in time, but it's so in the structure that has to be it has to be clear that how are we forming it, how are we registering it as a company, and who are the beneficiaries, and the beneficiaries are members of that association. That has to be clear. And even in the structure, you must be able to know that every term comes to an end. FITSPA's term is 2 years, and the members decide either to renew a term for another term, but it's 2 years. So it has to be, you have, even as you're founding it, it has to be a personal call, as in, what do you want from this? Is it for, you need to ask yourselves at the table, why are you doing this? Is it for the ecosystem? Is it for legacy? Is it for your own ego? Is it for your own PR? So many other things that you need to address at the beginning. But as really, and one of the things, and I was in the room when this formation was happening, and none of the 7 mentioned it was for themselves. It was for Uganda, and it was for the ecosystem of Uganda. And that is why the structure came to play. No one, even when now they're gone and they're running their own businesses, but they're members of the association, and they don't even have that entitlement that we created this, we are part of this. No. Yeah.
Ownership and entitlement. They're very
Ownership and
strong
entitlement.
words, aren't they? But they really do have an impact in how associations function.
Yes.
And of course, there will always be personal value. You know, nobody does anything. Nobody gets out of bed unless there's some sort of personal motivation for them. So that, you know, but that personal motivation needs to be, you know, part of, you know, and you know, of course, we all do things to promote ourselves, our companies. You know, that is just the world that we live in many ways. But having the country's ecosystem in mind and taking actions that support
this,
that, even if that means putting your own opinions or even, you know, the best interest for your own personal company aside in order to pursue what is best for the ecosystem.
No, I agree. There's always going to be an interest, but the interest, is it short, medium, or long term? So it was clear that their interest was, first of all, regulation, which was long term. The interest was community, which was immediate. They wanted to know everybody in the ecosystem. So it's depending on what your legacy long term. So it's some of these benefits are things that it has to, but if someone's interest is now, then for me, I think it's the wrong reason. Yeah. So when you have, like, say, boards, I sit on a couple of boards in associations, and the way the board members think is really amazing. It's really what you call trauma. It's very self-centered. Yeah. Yes. It's about when it's time to, they would even want to change the constitution because it's time for them to go.
Unfortunately, we see that a lot in many political contexts across
so
the world as well.
We could laugh at our politics, but we also do them in our own day-to-day.
Yeah, exactly. And you know, I think there is a balance that needs to be struck between new people coming on board and new ideas, but also the retention of organizational knowledge and history, and not losing that. You know, changing the whole board in one go.
Yes, no.
Regularly is a challenge. How do you overcome that at FITSPA?
So what we do is, like this year, 3 board members are leaving. So they all don't leave at the same time because they join at different times. So while 3 are leaving, new 3 are joining. And then we already have, because it's a board of 10, 3 are leaving, 3 will join. Next year, 3 will leave and 3 will join. So that is our board. So there's history, there's continuity, and there's a succession plan.
Great.
It was just intentional that we don't leave it hanging, and we support this. We create a succession plan that can be followed. So we have history, we have this maintenance.
I think that's incredibly important, because I have seen 1 or 2 of our members struggle with doing an election and almost changing the whole board in one go, and it can take you clearly into a very different strategic direction, which, you know, can be good or can be bad. But ultimately, what tends to happen in that process is few activities are delivered to members at that time, and the conversation about strategy is really great. But as you said, you know, you need to have a strategy, you need to have a vision, but you also need to be delivering activities and value in the market for your members. That's really key.
What changes in our case? What changes? The board changes. The management is still the same.
Yeah.
And management is the one that runs the strategy and the activities on behalf of the board. So even when the change happens at the top, there's little, members don't get affected, because the strategy is run by the secretariat, and all the activities are run by the secretariat.
And I think that's a luxury that time and funding gives you, but quite often early stage, it's the board are also doing a lot of the times the actual work of running the association, which, you know, sort of can lead to that, you know, more challenging situation when you first start, right?
We can't give the board, because our board is purely voluntary, so there's no one that's paid at the board. We don't even have board seating allowances. So everybody comes on the FITSPA board with the aim to serve and really grow the association. So there's no, that's why the board members come from because we don't have any money at the association yet to pay our board members. So it's everyone that comes on board is voluntary, and every work they do is for the benefit and for the growth of FITSPA.
And isn't that really interesting, because the staff are being paid, and clearly the board are prioritizing the payment of the staff to execute opposed themselves, which is another great reflection of how dedicated they are, right?
Yeah, they're doing an amazing job, and at no cost.
And I mean, we've been chatting, and you know, please just sort of flag to everyone else on the call, if you have specific questions that you want to ask, please either pop them in the chat or pop your hand up. We're happy to take it if anybody. I think I'm asking a lot of questions that people ask me to ask, but if I haven't asked your question, please do sort of interject, because I see we've got about 10 minutes left of the call, and I want to make sure that I've tested all of your knowledge to the most abilities, Anna, but of course you're joining our community anyway, so people can ask you these questions for the coming months, being, you know, you'll be in our community soon.
And just to let the community know that these are not unique questions. These are the same questions I've been asked across the 34 associations. And even recently, 2 weeks ago, I was in Kenya, and these are the same questions that are being asked. What is your business model? And every association struggles with this governance and all those things. And power play. And so these are the same questions that industry associations, and I believe the course that you have is really going to be helpful to industry associations. That's the problem that I always see, that associations are run by admins. The secretariat team is not strong enough to manage and run the association. So you find that an association is given to, it's just like, it's a by the way, it's just another, no one gives it enough value to hire the right people to run it.
Yeah.
So you find an admin running it and trying to do everything else, and they can't, because I
think it can be a step on the way. So if you've got a board who are willing to put the time and effort in, and an, you know, admin to kind of help do some of the activities, it's step one. But ultimately, I 100% agree with you. You know, you need whoever's running the association needs to be able to go and have conversations with the regulator, all the stakeholders, understand what cryptocurrency is, you know, the new trends happening in insurtech. You don't need to be an expert on everything in minute details, but it's that broad industry knowledge that you need to have, right?
You have to have, yes. And also willing to learn. You must be willing to learn and unlearn, because we're in an industry that revolves every day. So you must be able to relearn and re-implement new models and because your members keep asking for different opportunities.
And I love what you said earlier about involving your members. It's really interesting. Like we're often at Alliance given speaking slots at different conferences. Can you come to this conference? Can you come to that? And the one thing Camilla and I try and do is go, well, we can't, but actually we know the team on the ground there who can, and we try and give those speaking opportunities. But it's amazing how many organizations are reluctant to give that spotlight to their members.
Someone has to be intentional about this. And if you're not intentional, then the associations won't grow, because you have no product to sell. Now, in the case of FITSPA, I can't be speaking at an opportunity for agri-techs because I don't have an agri-tech product to sell. I don't have the skill, the expertise in agri-tech to speak about it. And I have experts in my community that can do a great job on that. What I think, and that is why I'm happy to have these conversations, is I know that my skill is probably building associations, ecosystem building. So there I'm able to speak, but if anything that requires, I'll pass it on to our community. If it's an insurtech conversation, then you pass it on to the insurtechs. If it's payments, then you pass it on to the payments. You can't be the power of everything, and you can't be the face. Your face are your members, and people don't get it. But your face are your members, don't you?
your role as a leader of an association is very much to continually meet the needs of your members. And in fact,
Exactly.
it's the only one I know that actually has that kind of one-on-one connection and onboarding process with their members, which I'm sure is very time consuming, but actually you understand what they are looking for, what you can
What
offer
they're looking for, what they're
right
looking
at
for.
that very beginning.
And we sometimes we say no, because if you have a company that comes in and you're not able to offer what they're looking for, you need to know that from day one, and you say, you know what, this is not for you, but there's another association that can support you on this.
Yeah.
Yes.
I remember having a conversation with Sugand, who's the CEO of Face in India, and she, she said the hardest thing when you first start is saying no to things or opportunities. Because you want to say yes to everything to try and
Everything.
build, but saying no, to some members or no to some opportunities.
We actually say no. Because we've learned to, because we've seen how associations have been affected by not saying no. So we actually say no to some activities and some opportunities, because not every opportunity is for us. And not every opportunity is going to support the member, to build the member. And the first question is, what is in it for the member? If we're working with you, even partner members, and there's nothing in for the members, then it can't work for us.
Yeah, it is. It's constantly going back to your members and putting their needs at the forefront of any conversation. Who is this going to benefit? Is this going to benefit all of our members? Is there enough of our members for it to benefit? You've got 200 and something now. If it's going to offer benefit to one or two, is that really what the community wants you to do?
We're thinking about 15 or 20 members, then yes.
Yeah.
If one or two, then it doesn't really add value to. Yeah.
And it's tricky to manage that, that process, and that, because it is scary to think you might miss out on an opportunity. But of course, a scattergun approach probably means you won't land one because you've gone for too many.
Yes, correct.
As we're approaching our last couple of minutes, can you just give us your final, maybe 2 or 3 pieces of advice that you would give those who are perhaps in an earlier stage? Maybe they're in year 1 or year 2, still trying to search for funding, still trying to, really make sure that they deliver that member value. What would you tell them? What piece of advice, what would you tell them to focus on? Or, what do you think is going to propel them into that 3-year, 5-year, 7-year anniversary that you've been celebrating?
I think really I just want to appreciate everybody for joining this call and for allowing me to share the FITSPA journey, and I hope it inspires anyone, your associations, to get to grow and become better. But for my call to action is, remember associations as service to your members. And if it's a service to your members, what value are you adding to them, and what value do you bring to them on board? And 2 is, how are you contributing to the overall ecosystem of your environment? Because if you're going to say to the Ministry of ICT of Uganda, I'm able to say, this is what the FinTech Association of Uganda contributes to your digital strategy. If I'm going to the Bank of Uganda, Central Bank, I'll be able to mention how FITSPA contributes to the overall strategy of the association. So it's different. You must be able to position yourself in giving value to every stakeholder around you and to your members. So what value? Always remember your why. Never forget why you started. Yeah.
Well, that's phenomenal.
As we grow, so many opportunities come, and most of them are juicy. But one of the things that keeps you tamed is, why did we start, and why are we here? And then you come down. Yeah.
I think that's a great reminder for us all that the stakeholders that we work with, and you've said it before, this relational concept, the stakeholders that we work with, but also being able to articulate perhaps at the beginning what your value will be, but as you go through time, what your value actually is, and capturing the achievements that you've made as an association and what you've done is time consuming and sometimes a little bit boring because you want to be doing new stuff. You don't want to be writing down what it is that you've done. But as you said, it's incredibly important to explain, you now have evidence of activities you've done and impact that you've made that you can then use to build those stakeholder relationships to get more projects and activity to have more influence in the ecosystem. So it's important to take some time to also put that evidence together.
And also remember that you may want, at times you want to make other members happy. They'll call in and ask you for a favor and you have to say no. So you also have to remember that you're running, you don't have to please anyone. You just have to focus on the vision.
Yes. And you can't please everyone at every moment in time. I remember.
And everyone, yes.
Yeah, I remember Camilo Tellers on our board saying that to me. He runs, Better Than Cash Alliance, and they also have a number of countries. And he says some countries are really happy with us, and some countries are not, and they can differ month to month of the calendar year. And I think that's also. But I guess when members are not happy with you, or when members are not engaging, or you're not seeing them coming to events, I'm guessing you're taking some sort of action there to sort of understand that, right?
And I think it's just because our events are member driven. We can't go into an activity if the members are not in for it. And that is why we always have, why are we doing this event? If it's a FinTalk, who is interested? We go back to the members, and the members have to be interested before we actually do an activity.
Yeah.
We run every 3 months, we do quarterly surveys and reviews of what activities we're doing, but they have to be member driven. Yes. And
I guess that's the other thing to remind us of is, we can all run these associations and run them well, but also the members have a responsibility to the community.
They have a responsibility. They have a responsibility to the community, yes.
But they also have to feel like they can take ownership of activities, contribute to activities, working groups. You can't run an association of members if your members are not prepared to do very much in that association.
That's true. You can't, because then you promise, say, the regulators that we have teams that are coming over and no one will show up.
Yeah.
And then you have no value showing to the regulator.
Yeah.
Yeah.
So it is running a membership organization is that kind of, you've got to have that mutual engagement support for one another to make it work. And again, comes back to that relational and knowing
building their relations, getting them on board, relating with them, genuinely relating with them, understanding their pain points, trying to solve their pain points, them knowing that you're here for them. It's about them, not about you or anything else.
And they might not feel direct value, enormous direct value every year, but feeling it consistently is key.
Because every once in a while on membership renewal, one of the members will ask you, but last year, what did I gain from FITSPA? And you have to be previously we were not recording or tracking what value each member benefits. But this year we've been recording what value. We make sure at least every year member 3 or 4 a member gets value. And also we answer why the expectations. Now that we are growing, members are asking, why should I renew my membership this year? And you must give them reasons why. Last year, this is what we did for you. And this is how you benefited. And this is how we continue to support you. And it's a question that comes up on every renewal. Even for you, for your insurance, as a person, when you renew your insurance, you evaluate why you're renewing your insurance for your medical insurance for this company. So the members do the same thing.
Yeah.
And you must show them that this is how we added value to you.
I 100% agree with you. I think, and that value might differ year on year, and depending on where that person is in their journey, or where that member, is in that journey. But it's a key part of, if you can't retain your members as well, if you can get them to pay membership fees in the first place, you then need to get them to commit to paying those fees. And an indicator of success is that they then start paying to be in higher tiers of membership as they grow.
Yes, they grow and they keep asking for more value from you. So you have to keep engaging them and encourage them to go higher, to go a level higher. Because sometimes they say, why didn't I do this? They're like, oh, because you're this level. And if you want to do this next year, you need to move to this level. So continuous engagements with your members is key.
I think we could carry on. I'm sure
No,
you
I
and I
know,
could
I
carry
know.
on
You
for a
and I
long
could
time.
go on and on. So yeah.
But I've really enjoyed this session. I can see there's some chats, comments in the chat there, and a couple of WhatsApps. People have found it really useful. Of course, this is just step one. We're going to be having FITSPA and you in our community, and I'm really excited about some of the insights and ideas that we can share. And it's clear to me that, when I look across the African landscape, if I compare Africa and Asia fintechs, I think the Africa fintech associations sometimes are operating a little bit behind the curve. But I can clearly see that FITSPA is definitely ahead of the curve when it comes to Africa. So we are very delighted to have FITSPA in our membership, and we really hope that together we can build a community where there's FITSPAs and the kind of impact that you're having in every single country in Africa.
No, thank you for having us, and we hope we can inspire more associations and also get to learn from you, because there's a lot that our members are looking for, and every other time our members needs change, and we need different communities, global communities, just to see what lessons can we learn and how can we continuously support our communities to grow. Yes.
We are in a wonderful field that you could wake up tomorrow and who knows what has happened
I know.
So
yeah,
we've all got to keep continuously learning and sharing and trying to cultivate that knowledge and best practice that then can have an impact for our countries and our citizens as well, I think.
true. That's true. That's true.
Thank you, Zaina. Thank you, everyone who came and the questions that people were putting to me and getting to me to ask last week. We really appreciate it. We hope you've enjoyed the session. We'll share the recording and we'll share a bit of a summary as well. But for those who missed out on the live version, can at least catch up.
Thank you for having me, and you can always reach out to me on my LinkedIn. I will be able to answer your questions, or anyone in the community. Yeah.
And I think we'll also add you into our WhatsApp group as well and introduce you there so people can reach you too.
That would be nice. Thank you very much.
Great.
Have a lovely afternoon.
Have a lovely afternoon and day, everybody, and we'll look forward to seeing you online again soon.
See you soon.
Bye, everyone.